USDA's April supply and demand report and all of the outcomes of the Trump's pivot in tariffs. Jerry Gidel is ready to assess all of that and more right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, Jerry, we have been talking about tariffs for several months already, I guess, and I think we'll talk about it for the next several months. And this week we have the pivot of Trump, the Trump administration, with the pause on tariffs for most of the U.S. allies that didn't retaliate. And that, of course, excluded China, that is now imposing 125% tariffs on the US products, including agricultural products. So, how did that impact the market for you?
Well, there seems to be actually a little bit of difference between the stock market and what's going on in the ag markets. They didn't get as beat up as the week went on, but basically, with the initial talk and the fact that we were going to see this. Well, the numbers from last week, and they were going to be increasing across the board, from the standpoint of, substantial numbers, anywhere from 20% all the way to 50% in various places. That definitely put the weakness going in the negativism in the world markets, both in the stock market and also the U.S. Scenario because of that. But as we got towards the end of this week, to some extent, uh, after the very negative reaction that the president was getting in the U.S. stock market, and also to some extent, some interesting reactions in the bond market, with both supposedly Japan and China both threatening to dump U.S. Treasury bonds, and that which would really change things dramatically here. On interest rates and things of that nature, and that supposedly that was some rumored impact on the decision that they came up with here about suspending the 90 days, uh, the general export ideas for 90 days here going forward, in an idea that there could be some negotiations. And there was lots of talk that lots of countries were offering out and wanting to talk, and that's a real positive. This hopefully we can get this whole thing settled out without having to go through a crazy uh, threat to each side. But the one factor in here that is still hanging over this market is, of course, the Chinese. They have not put out an olive branch. They continued to counter the Trump numbers. So he keeps ratcheting, they kept ratcheting. You mentioned we got up to 125 million, 125%. And at that point, you really are. There's some threats that we might go higher, all this kind of stuff, but it really doesn't make a lot of
Yeah,
difference.
at this point, I don't think there is any difference if they go a little bit higher, if they go a lot higher. The products are just not competitive at this level of tariffs.
Oh, definitely. Exactly right. When you're talking about doubling the price of whatever they buy, even the Chinese that can change the relationships here on their purchases when they sell it domestically, that still isn't good along the way from that standpoint. So, that had us going in that direction until we found somewhat of a silver landing there about Trump deciding to give us a respite for a while.
And
Sorry.
how did you see the supply and demand report impacting the markets?
I think that definitely came in to help us, particularly uh, in the corn market. With that number, it came through. It came in with a 75 million decline to 1.465, and the trade was only looking for about 30 million decline instead of 70. And actually, I think there's still a possibility that could further decline a little bit over the next few months. And that if these export trends continue as they are. And they also did some adjustments here. The ethanol number has been running very good. And that now they took 50 million out of that one. Uh, excuse me. They kept it at 50, 5.5 billion, I should say. From there, they did slice a little bit out of feed. In general, here, the corn number was positive for us here. The soybean number turned out to be a 5 million decline in their numbers. Uh, Everybody's so, because of this whole scenario here and the fact that the Chinese are such a prominent buyer in the world soybean markets, and that uh, everybody really didn't have a real super, uh, didn't have any idea where that was going, and particularly with the escalation continuing here, and the tit for tat approach from the two countries, and that the USDA decided to leave their exports. We're still running at a very good pace, and now the biggest thing is will they there's some ideas here that some of the 2 million metric tons of unknown destination is Chinese beans. And in the past, there has been a little window here in this April and May period before the beans come available in Brazil, in Argentina, that could still happen. I don't know where that's at, and I have no idea. That's really the unknown. I think that's the reason why the USDA left it unchanged in their carryover. It took only 5 million down on the thing. So it's basically, they did increase the crush, and that's getting back to this super strong soybean oil demand that's going on right now. The twist of it is that because of the palm oil seasonal decline, plus it's kind of impact of hot weather of a year and a half or 2 years ago coming through. It's a delayed reaction when this occurs in the Southeast Asia, and so now all of a sudden uh, the world demand is strong for of oils seeds. They can't get it from palm oil. They're looking to the U.S. soybean oil market, and actually the prices now are still cheaper than they were a couple of years ago when we announced this whole idea we're going to end up using soybean oil in the U.S. Renewable diesel world. What happened is that the used palm oil market came in and took most of that business. So now things are still rumbling along here in the international markets at this point. There is indications, though, that we're going to end up getting back to using more U.S. soybean oil in that area. But right now, we're shipping it to other people around the world so they can uh, stir fry their vegetables out there in their walks. So that's a big factor from there. And then a real quick idea here on the wheat. The slow export shipments and that we're way behind on getting it all out here in the last 6 or 8 weeks of the season, and so they did take off 15 million. I wondered they might even be higher than that, but they did only use 15 million, and then they did end up increasing imports by 10. So that's how we got a number. It was about 25, 26 million higher. Interesting, 846 million is not a huge number. It's not heavy, extremely heavy at this point. It is up over 100 million from a year or two ago. But the twist of it is right now, we did have a freeze in the south in Texas. No, I'll take that back. It was more Kansas, Nebraska, and Colorado earlier this week. And that's interesting in the fact that could be a factor coming out. We didn't have much reaction after the first day, and wheat has been somewhat of a lackluster performer in this week's wheat price or in grain prices in general. But I think that in general, the dryness in the Texas and Oklahoma and Western Oklahoma is going to be a factor going out. You put it all together, there's some issues why wheat can rally as this won't be as strong because we are going towards the U.S. Growing season on wheat as it comes out of dormancy.
Yes, now for the upcoming week or the weeks to come, I think there will be a strong negotiation and perhaps an announcement with key countries like Japan and South Korea, which
Mhm.
are large agricultural product purchasers. So, do you think there is going to be an impact? I think that maybe they will go even that way, announcing more purchases of agricultural products.
I think you got a good insight there, sir. I do think a similar situation, particularly I think Japan, South Korea, I think Vietnam will be in here too. We just had this idea about Thailand was also talked about here late this week, and that they are somewhat of an importer of U.S. corn, but they have a pretty high import tariff. So there's a possibility we could pick up a little there, and that. Well, we sure didn't get much in our exports this way. Everybody was dialing back because of these tariffs and that, not knowing exactly what's going on there. So that could also help in the next couple of weeks of some shipments going out in the world as we go forward. Excuse me. The oh. So in general here, Washington news, I think we'll also see some positive news going on here. Domestically, the NOPA crush will be out on Tuesday. We had to pull back it during February here because of this expanded or the commentary out of Washington about tariffs and things like that. But the trade is expecting 197.6 million on Tuesday on the NOPA crush. That would be just slightly higher than last year, but in general, get us back on the general idea of increases here longer term. The one thing that we have to keep, and I think that's part of the reason why the USDA only left or increased their crush only by 10 million bushels, was the fact that we are really pushing out a lot of meal right now. Our hog industry, it loves meal, but at the same time, they only need so much. Same thing with chickens. They're another user of U.S. soybean meal. I haven't seen a lot of big increases in our chicken industry from a standpoint of fryers and things like that. And unfortunately, the beef industry does not utilize soybean meal. It doesn't need that high a quality. So I hope we can get a little bit of export business going on here in the meal and that going forward. But there's Argentina is a strong competitor out there. Even we have some meal being produced. Excess meal down in Brazil that gets into the world markets too. So it's a delicate balance right now. I think to some extent we need the oil domestically from the standpoint of also it. One of the things that popped up this week, by the way, was a statement from both the U.S. oil uh, energy firms and the ethanol firms that they were proposing an idea of increasing the U.S. At renewable diesel usage from 3.5 up to 5.25 uh, billion gallons, I think it was, and that. So that's going the right way from the general point of view, but uh, uh, in the short term, at least, we hopefully get more and more good news in the tariff world and also dealing with the world's uh, issues out here on trade and that. It's always going to be tricky, though. We got so many different places news can come out these days, from Washington to and that along the way. There is a kind of a murmur going on, by the way, about reductions in the USDA staffs, things of that nature. That'll be also something we have to deal with going forward.
Yeah, so you do expect the volatility to continue on that next week on
Oh,
the commodity
definitely.
market.
Definitely, and we're going to be playing weather. We're going to end up playing, but I think the background you pointed out initially is if we can get some more positive numbers and positive talk coming out of these things on trade, I think we could still edge up in these things over the next few weeks because we did take out some important, interesting upper leveled uh, resistance levels on uh, trading values and that on this Friday. And so that usually could suggest that we might even actually push corn up closer to the $5 level again, or excuse me, past the $5 level this time, up into the 5.15 to 5.20, and beans maybe we'll actually get above or go further on this stuff then and get closer to $11 out there on these things as we get into the middle latter part of this month.
Yeah, I like the crystal ball. Thank you.
Good, good. Well, take care and we'll talk next week.